Right, this is an attempt at a really quick video summarizing activity-based costing because I'm going out in about 5 minutes. And so let's see how quickly I can do this. So activity-based costing could be part of an assay, could be a six marker. So what does it mean? So activity-based costing identifies what causes overheads to increase, which is what we call cost drivers. So we break down our different overheads and we say this is why it goes up. So for argument's sake, it could be the stores departments. They're the ones that actually receive all the orders. So clearly the amount of requisitions from the different departments would mean we pay more for stores. So therefore, we would use that as a cost driver. Once we've identified the cost drivers for all the overheads, we divide those into the cost pools. So the cost pools are all the overheads which have the same cost driver. So we put them all together so we can work out a overhead absorption rate per cost driver. We then charge those overheads according to usage. So those departments which actually use more of those cost drivers would be charged more. That's fair. It's fairer than absorption costing on that basis because we're really looking at why those overheads increase rather than just this arbitrary, oh, we're going to charge by machine hour, labor hour, which doesn't look at the nuances, what causes those overheads to change. So therefore, we can use this method to reduce overheads because we can identify if it was stores and it was requisitions that we could cut back on the amount of requisitions to reduce the stores cost, or if it was batches, so the production runs, we could cut down on the amount of production runs because of the amount of batches that we produce in, or we can change production levels to reduce overheads. So it depends on the question, but we could definitely use it in that way. Activity-based costing can be used for inventory valuation. So under IAS 2, so International Accounting Standard 2, we can use activity-based costing because it's full cost recovery, the same way as we can use absorption, but not marginal. The selling price we can argue is more accurate because it includes a share of all of those overheads, which marginal does not. It does mean it's going to be higher, but it does mean each product should be profitable. It's appropriate for capital intensive production. So if you've got heavy machine based production with lots of different methods, then you would use activity based costing. If you didn't, or if all production was very similar, there's no need for activity based costing because it's quite time consuming, and so therefore it's not required if all your products are produced in a very similar fashion. It is time consuming to do, so working out the cost drivers, dividing them into cost pools, it does take a lot of time, so it isn't necessarily always beneficial for lots of businesses, and it's really difficult if you're going to explain that to someone who's non-financially minded. Non-financially minded, is that a phrase? Well, I've said it. So a non-financial manager pitching to them why you're using activity-based costing could cause you an issue. So that's a problem as well. Whereas absorption, we just charge you this much for overhead. It's straightforward, it's easy. We charge you this much per order. We charge you this much for requisition. We charge you this much for each production run. It comes too much, and they go, I'm not interested. And then that loses its value. Also, the cost driver selection itself might not be accurate. It's arbitrary, it's random. Really, for this to be completely accurate, you need to have as many cost drivers as possible. You'd have loads and loads of cost drivers because you'll break down into the minute detail why the different overheads are changing. That takes time, but it will be more accurate. Is it really worth it? So it would need to be a business on the scale that would make it worth it. Right, quick video, 3 minutes. Hopefully it helps. Good luck.